But with this, let's also put the spotlight on Astral. The company did come out with the earnings, but what's the way forward? Let's try to get in more sense from Mr. Hiranand, who is the ED and CFO of Astral, joining us on the show. A very good morning and thank you so much for your time. Firstly, onto your numbers, the growth has been in the low single digit. What is impacting the growth? Help us understand this, and how is the overall demand scenario shaping up?
See, if you see the industry was passing through a difficult year last year. The main reason was continuous falling into the polymer price. PVC price dropped by close to about 18% during the year. In spite of that, you can see that our company is able to grow that thing. So practically, industry level volume was degrown by 5 to 6%, while our company has delivered a growth of 3 to 4% volume. So clearly, we have gained the market share. So market was big way challenging. Secondly, there was a huge losses on the inventory throughout the industry because polymer price dropped sizably. In spite of that, if you see our number, we have delivered even better EBITDA percentage than the last year. So that clearly shows that in spite of having so much of challenges, company was able to maintain its margin. If you see the other players in the industry, everyone has lost between 25 to 50% EBITDA margin, but our company has improved in this difficult time also. Even our gross profit margin has also improved by 1%. So overall, in spite of so much of challenges, we have delivered one of the best number.
But also give us some sense that till when do you expect the market conditions to improve, especially on the demand side?
So I think two, three things are there which can drive the market in FY26. Number one thing, polymer price. If the polymer price start inching up, the dealer and distributor which are completely destocked right now sitting with a very lean inventory, that will drive them to restock that inventory. That itself is going to give the reasonably high growth to the industry. Secondly, two burning issues are going on in the industry. One is the BIS. If the government is able to implement the BIS standard, then a lot of unorganized players are going to suffer, and a lot of this dumping of Chinese raw material in India will stop. So that is also going to drive big way to the organized player. Secondly, anti-dumping duty issue is also there on the card. We are expecting that the government may take any time that decision. If that is also going to happen, then whatever the dumping is happening from the China at a low cost, that will also go away. So that will also restock the inventory with dealer and distributor. Because right now, every dealer and distributors are of the mind that polymer prices are continuously going down. So we don't want to hold any inventories. So that will change their sentiment and they will start restocking that also.
All right, point taken. But Mr. Savlani, lots really been happening outside India, and especially with respect to the tariffs. So give us some sense that how do you see the tariffs implication on your industry, especially on the raw material margins, and from here on, how is the export outlook boarding up?
I think our export contribution is hardly anything, hardly 1.5% kind of level, which is insignificant to our total top line. So we don't see any effect going to be there on the tariff on our company.
All right, not much of an implication there, but we know that your exports are less, just hardly 1 or 2% is what you're indicating. But the raw material exposure is significant, is what we believe. How much will this impact the raw material prices from here on? Where do you see those raw material prices headed?
So that is what exactly happened now. But I told you that these two things are there on the radar of the government. So when the decision is taken on these two, the polymer prices are going to go up by 10-15%. That will help the industry to the realization and the profitability.
All right, but Mr. Savlani, when I see your margins, they were actually flattish at 18 odd percent. But give us some sense that from here on, where do you see the margins headed, especially for FY26 on the guidance front? If you can share a number with us, and how much volume growth is the company planning to deliver?
So I think we will be able to stabilize the margin what we have delivered. Last 3-4 years, if you see, we have delivered in that range only. And we want to continue the margin in the same range only. But volume will be very high once these problems are sorted out and demand will start picking up. Because government side also, the spending is slow right now. That will also pick up in the coming time. So that will also drive the industry. So that will help us to grow our top line. Margins may in percentage term remain same.
All right, and along with that, what's the outlook for the revenue and your margin performance, especially for the adhesives and the paint business, given that the demand scenario and increasing competition in the sector, where do you see these numbers going?
So if you see the adhesive, India operation of adhesive has delivered a growth of 20% in top line in this Q4. And our margin has also improved. Last year, our Q4 margin was 15%. This year, our Q4 margin, India operation had delivered 18.75%. So 375 bips higher compared to the last year. So we don't see any challenge into the adhesive business. That business is growing very well in spite of so much of challenges. Full year basis also we have grown 15% and we have improved our EBITDA margins also. As far as this paint is concerned, I think we are new into that industry and a lot of industry challenges are going on. In spite of that, we were able to grow this quarter close to 7% in our top line and deliver EBITDA of 5.23. And in the coming time, once our volume will start picking up, we are confident that we will improve our EBITDA margins also.
But also give us some sense that which segments will be the growth driver for the company going ahead? What new initiatives is the company taking?
I think few new initiative company has taken, company has invested the money that is going to drive the growth for the next year. Uh, in spite of this, in addition to what we are giving the products offering, the number one thing is the OPVC. I think OPVC demand is going to shoot up in the coming time, and everyone know that this product has a very high realization and high margin, so that is going to take the uh, top line of the company in the next level. Secondly, we have got the international approval for fire sprinkler pipe fittings. We were already having the pipe approval. Now we have got the fittings approval also. So now we have a complete system which has a UL approval. So that is also going to help us to grow the fire sprinkler pipe business in India as well as the export market. Because in export market without UL you can't export. So that we have recently got. So that is also going to help us in the coming time. Secondly, we have recently launched the PTMT range of the product, that is the plastic fittings, faucets and all this thing. So that is also going to help us to grow the market in the coming time. And another thing which we have ordered a very excellent product called PAX. So PAX machine we order, which we are expecting to come in the second half of this year. That is also going to drive the business of this plumbing because PAX is very well acceptable product in the European market and in high-end projects, apartment or maybe hotels or maybe villas or maybe bungalows. This products is going to be sold in a very high volume in the coming time. So we are going to start that product also in the second half. So all these things are going to help us in the coming time. Bathware also, we are growing very fast. This year also, you see, we have delivered 51% growth in the bathware also. Still, our base is low, so we are expecting that this business will further grow in the coming time. So all these new initiatives are going to drive the business in the coming time, in addition to whatever we have the existing products.
But Mr. Savlani, since you just touched upon the OPVC products as well, if you can give us some sense that when are you planning to start the sales, any timeline, or have they already started?
So like recently only we have got the ISI approval. So we are targeting to sell this product by June end or maybe beginning of the July. So Q2 onward, you will see the numbers of OPVC in our revenue.
And lastly, if you can give us some sense that what are your capex plans for FY26 and where do you plan to invest that money?
So I think capex will be not more than 250 to 300 crore max because our Kanpur plant is construction is completed. Now shortly we are going to start the installing the machines and all this thing. And afterward the capex will be very light. If you see our number, last 2 year company has spent more than 1,000 crore rupees. But that benefit of the utilization of capacity is going to come in next 3 to 4 years time. So that is going to drive our growth in the coming time and will be with a very low capex in the coming time.
All right, Mr. Savlani, with this, we let you go on that. Thank you so much for taking the time out and speaking with us.